If you've been wondering whether right now, April of 2026, is a good time to buy or sell, you're not alone. The market right now feels a little bit confusing. So today we're going to break down what's really going on. What are interest rates looking like? What is the current market looking like? What things are still a little bit unknown so that you can make an informed decision. Hi, I'm Elyse Moore, and I help people in Plainfield, Oswego, and the surrounding suburbs make great decisions about real estate. The easiest way to describe our real estate market right now is a combination of shifting, rebalancing, and still a lot unknown. We're not currently in the extreme seller's market of 2020 and 2021. We're not in a buyer's market. We have some homes that are selling very quickly for multiple offers, and we have others that are kind of sitting still. We also have the uncertainty of a political climate and a war that may or may not have a major effect on things depending on how long they last. Let's start by talking about interest rates, because that's really what's driving what's going on in the majority of situations. Interest rates in early April 2026 are lingering in the mid sixes to sometimes touching into the upper 6% range. Now, recently we were down in the lower 6% range. We even were starting to see a couple instances of interest rates dipping below 5%, and the reason they've jumped back up is because of the war in Iran. We just don't know how long that's going to last, what the overarching situation is going to look like, and what that might end up doing to our overall economy. Because of that, interest rates have gone up, and the reason they do that is to price in a little bit of safety and security against the unknown. Affordability still continues to be a bit of a challenge, and as interest rates have gone up, that's not getting any easier. As interest rates go up, you see more and more buyers kind of pause, or they get a little bit less aggressive, or they reduce their search price. Now, on the flip side, we still have extremely low inventory. So the homes that are priced properly are prepared properly, meaning they've done the work. They've done the staging, they've done the preparation, they've removed the questions, they've kind of done all of those traditional things. Those are still going very quickly for a very solid price, oftentimes with multiple offers depending on the location. One of the biggest reasons that inventory still continues to be a challenge is what I like to call the lock-in effect. So in essence, what that means is that you have a lot of sellers that are locked into a very, very low interest rate. Back in 2020 and 2021, when interest rates dropped down to roughly 3% on a 30-year fixed mortgage, you had a lot of sellers that refinanced and locked in that rate. So for them, in addition to the stress and overwhelm that comes with moving, they also have to absorb the idea of jumping from a 3 or 3.5% interest rate to a 6 to 6.5% interest rate, sometimes 7% interest rate, depending on their situation. That's a huge pill to swallow. That's a big financial adjustment for a family to make. Because of that, it's one more layer that they have to unpack and untangle before they decide to put their house on the market. In addition to that, real estate is notoriously difficult to increase inventory quickly because of the time that it takes to build a house. We also, in Chicagoland, are relatively landlocked. You've got a lot of areas between the southwest suburbs and the city that don't have space to build. You've got some new construction that is happening in kind of those fringe areas. Plainfield has a lot of it. Oswego has a lot of it. You've got it in Yorkville. You're starting to see it in Plano. We've got new construction happening. And because of where it's happening, it's not conducive to commuters. So anyone that is continuing to see return to work orders, if they are starting to hear inklings of having to go into the office more, they're a little bit more sensitive to those things. Because of that, you have more people that are continuing to fight for those prime locations, and enough just isn't coming to the market because of that lock-in effect. And so we kind of are seeing this cycle perpetuate. So the real question is, who has the advantage in this real estate market? And the answer is, it just depends. Depending on the segment, you're going to see a little bit of a different advantage, right? When you are talking about starter homes, affordable family homes, and homes that are well prepared, well priced in strong locations, the advantage, bar none, is with the sellers, right? When you have a property that is a little bit more niche, so that's going to be our luxury properties, really expensive properties for the area. Those tend to have a little bit more of a swing towards a buyer advantage. When you have a property that is in disrepair, a lot of buyers right now don't want to tackle a major project because of that affordability challenge that we touched on earlier. those properties tend to see a bit more of a buyer's advantage. Properties that just have a small buyer pool, meaning condos right now are a little bit challenging, especially smaller condos, 1-bedroom condos, condos that maybe have 2 bedrooms but only 1 bathroom, or condos that don't offer a very easy commute tend to have a bit of a buyer's advantage right now. Overarching though, sellers still have the advantage. Homes are not sitting for very long. There is still an inventory shortage. And as a whole, when we zoom out and look at Chicagoland as an entire real estate market, the advantage still lays with the sellers. So what does this mean if you're buying in this market right now? Number one, have your ducks in a row. Make sure that your financing is rock solid. You have a very clear idea on what you need, what you want, and what you can be flexible with, and that you are working with a team that understands how to get this done in today's market. It's not just as simple as showing a house and writing an offer. If you are a seller right now, strategy matters. Positioning matters. This is not the market where you can just throw something out and hope that it sticks. You need to have a very clear reason for why you're making the decisions that you're making in terms of pricing, marketing, and timing. All of those things need to be done in collaboration with your real estate team to make sure that you are maximizing both the market but also your goals. As we head through 2026, I see the market at the very minimum staying steady, but very huge potential for it to uptick. And here's the reason why. The only thing that is potentially holding us down right now are the fact that interest rates have jumped up a little bit. Interest rates have only jumped up because of the war in Iran. If that comes to a swift conclusion, I anticipate that interest rates are going to reduce back down into that low 6% range. They will likely slowly continue on their downward trajectory, and that's going to flood the market with buyers and potential. At the flip side, there is potential if the war ends quickly and rates drop quickly, in addition to the Fed continuing to reduce rates, that the market absolutely skyrockets. It's still a little too early to tell what's going to happen as we move through the rest of the year, but early 2026 is showing us a lot of potential in the real estate market. As always, if you are thinking of selling your house in 2026 or buying a house in 2026 and you want to have a strategy session or just a second set of eyes on your current plan, drop us a line. There's a link below. We are here.